Everyone wants to become a millionaire, and over time, cryptocurrency has been touted as one the host to millions. Even though the US government does not completely buy the idea of crypto, people do. Altcoins have been seemingly impressive lately, however, two of them just caught our fancy. Do you know John Bollinger? He's the esteemed market analyst and the innovator behind the Bollinger Bands, and he dished out some updates you'll be interested in. Being a fan of Bitcoin, he has once again turned his focus to the cryptocurrency, hinting at the potential upward price movement in his recent X post. Highlighting a 2-bar reversal for Bitcoin at the lower Bollinger Band on September 11th as the controlling technical factor, he suggested a possible surge if more strength is seen. As reported, Bollinger recently spotted a potential upper band breakout and indicated a possible bullish trend for the cryptocurrency. Bollinger Bands comprise a middle band representing a simple moving average, and an upper and lower band signifying standard deviation levels from the middle band. These bands serve as a gauge to measure, and traders use these bands to identify potential price spikes and reversals in volatile markets. It's all part of the technicals. At the time, Bitcoin experienced a 2.4% increase, with its market capitalization surpassing $530 billion. Then data analytics firm Sentiment revealed a bright long-term outlook for Bitcoin, noting well accumulations of Bitcoin and USDT. But the firm also warned about possible short-term corrections. Also, in a recent exchange of views on the financial landscape, renowned author Nassim Taleb took to X to criticize Robert Kiyosaki, the popular best-selling author of Rich Dad Poor Dad. Remember that Kiyosaki has been making some incredible predictions lately. One of them involved a caution where he told people to get their money out of banks. Taleb's tweet was in response to Kiyosaki's recent claims, where he highlighted the upcoming crash of the financial markets and advised him to choose gold and silver, which he often refers to as God's money, for capital protection. Taleb is known for his work on unpredictability in the financial markets in the book Black Swan, and he criticized Kiyosaki's assessment, especially his belief in silver and gold as a haven against inflation caused by extensive money printing by the US Federal Reserve. The Black Swan author argued that historical data indicates the dollar's stability against gold and silver, even amid significant economic turbulence in the past. However, it turned out that the disagreement between the two authors goes beyond the precious metals. They also covered the topics of cryptocurrencies, especially Bitcoin. Taleb had consistently expressed skepticism, referring to Bitcoin as destined to die fad. On the other hand, Kiyosaki has been a staunch supporter, likening the cryptocurrency to the people's money, placing it on par with traditional commodities like gold and silver. Kiyosaki has actually gone as far as to predicting Bitcoin's potential to reach a staggering price of $1 million. The two authors have different views and perceptions about Bitcoin, so this clash of perspectives highlights the ongoing debate within the financial community about the future of traditional assets like precious metals and the rise of cryptocurrencies, in particular Bitcoin. So whose opinion in the end will be considered? Well, the crypto market is fraught with people who have different perspectives and strategies, so if someone walks up to you and says that Solana is the best, it's just because of the nature of the perspective he or she has. However, let's try zooming out. When the Securities and Exchange Commission filed its lawsuits against cryptocurrency exchanges Binance and Coinbase Global in early June, Cardano and Solana were caught in the fire. Both of them were named as unregistered securities, and the news was shocking for many investors, and both crypto tumbled in a month. On June 27th, Robinhood Markets made a move, officially delisting both Cardano and Solana, but it didn't mean that these two cryptos, both of which still rank among the top 10 cryptos in terms of market cap, are going away. Now, why should we consider Cardano a big catch? Crypto influencer Dan Garmedello, founder of Crypto Capital Venture, recently shared his insights on Cardano ADA in a comprehensive YouTube video. He explored Cardano's market position and technological advancements, and drew several comparisons with Ethereum, explaining why he believes Cardano is a strong contender in the crypto space. And it's not because everyone says so. Garmedello has strong reasons. The crypto analyst started by emphasizing that Cardano remains a top 5 cryptocurrency, even amid market volatility. He noted that Cardano is ready to go for the next bull cycle, maintaining its market position despite bearish sentiment. Garmedello also drew a parallel between the market cycles of Cardano and Ethereum, pointing out that both cryptocurrencies had similar first bull markets, with Ethereum reaching $125 billion market cap and Cardano close behind at $93 billion. Both also experienced significant drops in their bear markets, with Ethereum falling around 94% and Cardano around 91%. He further argued that Cardano is not late to the party in terms of technological advancements. He cited the launch of the Alonzo smart contracts and the emergence of DeFi platforms like SundaeSwap as evidence that Cardano is on a similar but potentially more advanced technological path compared to Ethereum. Moreover, discussing the concept of total value locked, Carbondello suggested that if staked ADA were considered in Cardano's TVL, it would rank much higher. He argued that Cardano's innovative stacking mechanism, which allows for ADA to remain in its user's wallet, should be considered an asset and included in TVL calculations. Carbondello believes that Cardano is a strong contender in the crypto space for various reasons, including its technological advancements and market resilience. While acknowledging that Cardano does have its flaws, he noted that it is doing a great job in terms of security, decentralization, and scalability. While of the two cryptocurrencies, Cardano is easily seen as the safer bet, all other things being equal, and that's because Cardano has taken many steps to protect itself from regulatory risk. For example, at the end of 2022, Cardano formally launched a new phase of development called Voltaire, where it will become more and more decentralized while handing off more power to its community. The ultimate goal is for Cardano to become self-governing and without the need of a third-party company to guide the growth of the Cardano blockchain. In terms of long-term growth, the big catalyst for Cardano is still decentralized finance. While Cardano has had some success in other areas of the blockchain world, such as non-fungible tokens, the real future growth catalyst is in fact decentralized finance. This year, Cardano's DeFi growth has been at record levels, and it's finally looking like Cardano might one day become one of the world's top DeFi ecosystems. And believe it or not, the metric here to watch is total value locked, which measures how much of a crypto token is locked up in DeFi protocols. Now, what about Solana? From a regulatory perspective, Solana carries much more risk than Cardano. For one, Solana was caught up in the meltdown of crypto exchange FTX last year due to the close links between former FTX chief executive officer Sam Bankman-Fried and Solana. It's like a stain that can't be washed off. Plus, Solana has relied on venture capital models of development. This makes us wonder whether Solana is not a security like it claimed after all, as venture capitalists invest in companies, right? But like Cardano, Solana is making the case that it shouldn't be classified as a security. However, the major selling point for Solana is its vast blockchain ecosystem. Solana is already a leader in areas ranging from NFTs to DeFi and has continually found new ways to build this ecosystem. In April, for example, Solana completed the migration of Helium, a decentralized wireless network, to the Solana blockchain. Of course, if you're a risk-averse investor, you should avoid both Cardano and Solana. There's simply too much regulatory risk over the short term, and any direct enforcement action by the SEC could pose an existential threat. We've already seen how the specter of the SEC enforcement can spook the market, and how trading platforms like Robinhood would rather delist those tokens than risk running afoul of regulators. But if you are an investor with a high tolerance for risk, there is plenty of upside potential for both of these cryptos. Solana looks like the safer bet, but Cardano looks pretty attractive too. Over the long term, Solana has the type of innovation strategy that could pay off big and to lead to much higher valuation. Many people have blamed Sam Bankman-Fried for the chaos in the crypto market due to the collapse of the FTX exchange. This collapse uncovered a plethora of problems, and no one wanted to have anything to do with him or things connected to him. But it is not enough reason to belittle Solana. Cardano ADA, of course, is not that bad either, although some have labeled it as a church, where any small achievement spreads like the gospel. They're both good options, but at the end of the day, it all depends upon your research. But that's going to do it for today's video. Make sure to click on the subscribe notification buttons, and we'll see you in the next video.